got to give you a quick heads up because I got a lot of people asking me, what's going on with GameStop and AMC today. In case you're unaware, there is a little something called a note issuance going on right now from GameStop. And basically, from the looks of it, it looks like they've already completed it as of yesterday and today. And they are selling around $1.1 to $1.3 billion worth of convertible note bonds for 2030. And what this means is that GameStop has the opportunity to get $1.1 to $1.3 billion in cash now, repayable in 2030 at a nearly 0% interest rate. And in order for these companies or for these people to buy these bonds, well, something's got to happen. They've got to hedge. In order to hedge, they're also going to short the stock. So what you've seen with GameStop is the stock being pushed down to a massive increase in short volume. What's going on, Quant Trades, Bilbo, Black Widow? So this increase in short volume in GameStop also drags down other equities in that basket as they're being shorted as well during the same baskets of derivatives. So that's why you've seen a huge decrease in price on stocks like COS and AMC. As GameStop was shorted, because of course hedge funds are going to hedge, and naturally if they're buying these, if anybody's buying these bonds, which it appears that they've already been completed, like the sale is already over, they're going to short the underlying equity. And that means that everything else in that derivatives baskets, also all sorts of different kinds of consumer discretionary, such as AMC and COS, etc., that are held in those same baskets, are also getting dragged down along with it. So what I'm seeing right now are incredible deals and discounts on stocks like AMC and GameStop and COS and such. No, this is not financial advice. I'm not a financial advisor. However, from what I'm seeing, this is probably, for me, the best time to buy GameStop since it was at, $12 last year. And I was telling everybody, this thing just went from 10 to 12 to 14 overnight. It's going to break 25. And guess that's exactly what happened. It broke 25 and then 35 and then it broke, 75 the next day after. And I made some, few tens of thousands on some of those call contracts for GameStop that were relatively short dated as well. That was really nice. But the downward pressure on GameStop means that has crushed a lot of the implied volatility of the contracts as well. What's going on, Black Widow, KP, M. Dot? Am I cosplaying as ZZ Top? Yeah, man, I just threw this fake beard on, and I shaved my head just to be ZZ Top. You know how it goes. But that's pretty much where we stand at that. And I wanted you guys to know some really interesting information about Paul Atkins. I believe yesterday was Paul Atkins' confirmation hearing in the Senate, and they asked him a few questions. He had some fantastic answers. The reality, most of them were about crypto, not really much else in regards to markets. But there are rumors swirling in coming out of the SEC right now, stating that Paul Atkins is going to go after naked shorting. And this isn't something I'm coming up with, and it's not something that I've just deduced out of nowhere, but I've heard from several different sources now that there are various rumors swirling around from the Securities Exchange Commission stating that Paul Atkins is going to seriously do some damage to naked shorts. And I think that's incredibly bullish here as well. And I wanted to inform you guys that as of right now, the Senate has pretty much given Paul Atkins some questions, and he's got to come up with the answers and give them back to him. So he's looking like his confirmation here is going to be in April. And that's pretty much where we stand. And just wanted to give you guys that heads up because I keep getting the question a lot about what's going on with AMC. How is it under $3? How is GameStop back to $22, $23 or so? And just wanted to give you guys that notice as to what's going on. And this is arbitrage at its best. As these guys are hedging to buy some of these bonds, they obviously want to push the price down as they short it in order to, for a multitude of reasons, right? because they're not gonna expose themselves too much, and that allows them to bring down the premium. The premium, the convertible price on some of these bond notes, basically for the shares, would be like around 29 bucks and change, so just shy of $30, and it's at about a 37% premium, and that's a lot cheaper than MSTR, MicroStrategy, who the first time that they issued shares on the open market, or should I say they issued bonds on the market for in the same sort of way, their premium was about 58%. So GameStop, probably because they've already got over $4 billion, $4.7 billion in cash on hand, plus the additional, 1.1 to 1.3 billion in cash that they're going to get from this, and the fact that they have closed a lot of underperforming GameStop stores, and the fact that they were profitable around 130 million this last quarter, is absolutely phenomenal news for the company, especially since Ryan Cohen and the board are doing some good things. But at the same time, of course, you've got some people out there trying to blame Adam Aaron and blame AMC and such for the declined price of AMC, in which, as you guys know, they have absolutely no control over, especially knowing everything that we know about manipulation in markets. Eagle Eye says, I bought at deep discounts at those rates yesterday. Cheers, my friend. Cheers. Best of luck to you. Best of luck to us all. But I haven't sold. I'm not going anywhere. And the saying stands. We're going to be so fucking rich. And I'm seeing some people come back. You know who I'm talking about. Trying to say that AMC and GameStop are a bad investment. Interesting that those same people were singing a different tune not too long ago, while the companies were actually at risk of bankruptcy. Now that that risk is gone, now that the companies are holding hundreds of millions and even billions of dollars in cash on hand, and have closed underperforming movie theaters and underperforming stores, retail stores, GameStop, well, that risk of bankruptcy is pretty much, I wouldn't say at 0%, but as close to 0% as it's been over the last 4 to 5 years. So the reality is that I'm wondering, who's paying these people? Who's paying them to go out there and spread this false news? Are they short the companies? How is it that these people that were so bullish on it when the companies had poor fundamentals are now bearish on them? Meanwhile, the fundamentals have increased dramatically. The short volume on GameStop and the derivatives basket has increased massively. Archegos has gone bankrupt. Credit Suisse has gone bankrupt, and now UBS is left holding that same bag of toxic derivatives. Meanwhile, we've got all sorts of ISDA contracts out there, and we have no idea just how massive their short positions are. Super Steven brings up a great point. If you're bullish on AMC from 2021 but not now, it just shows how much of a lack of knowledge those people truly have. I do have to agree with you on that, Super Steven. We've disagreed on certain things in the past, but that's okay. There are certain things out there that stand very, very viable. Do me a favor, drop a like on the stream if you learned something or if you find it educational, so that others can learn about it as well. I'm going to do a longer stream later today. Cheers, my friends. I'll see you in a few.